Hi, and welcome to my video today. I'm Chad Shoop, and we're going to be completing the trifecta that I started to tell you about a few weeks ago with the Santa Claus rally. That was the first part. Today we're going to look at the final two parts, so that way you have a trifecta that I watch going into 2020 to help predict what I expect to happen in the stock market. Before I jump into that though, I just want to give you a quick reminder that you can scroll right below this video and just click subscribe, so that way you don't miss out on any of my weekly updates, because I've started a new series called Bank It or Tank It, and basically each week I'm going to review a stock, many of the stocks that you all are going to pick. I'm going to review this company for the sole purpose of just figuring out whether or not it's a stock that we want to bank on going higher, or a stock that's going to tank and go lower. So be sure to check those out. I have a link below to my latest one on Cisco, the tech giant, where we broke it down, looking at the fundamentals, the sentiment, the technicals, looking at everything for Cisco to figure out whether or not this is a stock that I think is a buy at the moment or a sell. So be sure to check that video out. There'll be a link below to take you to it. That way you can learn what I think about Cisco and how we view that going forward. All right, now jumping into our video today, we're talking about a trifecta that has an incredible win rate of predicting the stock market returns at 90%. So we had the first one, that's the Santa Claus rally, and there will be a link below this video as well if you want to catch up on exactly what the Santa Claus rally means. But basically, the Santa Claus rally is a time of the year where stocks tend to climb higher after Christmas into the first 2 days of the new year. So that's about a 6-day time period, 5 or 6 days, and stocks typically go higher during that time period. And that's the first part. So if that's positive, then you can look at the next indicator, and it's called the first 5 days. So the first 5 days of the year tend to be positive, and when they're positive, they actually have an 82% accuracy rate of predicting if the stock market's going to be higher in 2020. So that's something you definitely want to watch, but it's also the second piece of the trifecta. So if the Santa Claus rally is positive, the first 5 days are positive, then we can look at the final piece, and that's the January barometer. So this is the fact that January tends to be a positive month as well. You can see that getting into a new year, these first few weeks tend to be generally positive. They're usually bullish, but they also give major indications about how the year is going to play out. January, the month itself, if it's positive, then 76% of the time, the full year is going to stay in a positive territory. So that's a pretty good indication about how the year is going to play out. And when we look at January, it's actually the final piece of the trifecta. So we have the Santa Claus rally is positive, the first 5 days are positive, then January ends up positive. Then that's what dictates a 90% accuracy rate for the entire year tends to be positive. But what's more important is that after January, when you look at after this trifecta is completed and you look at the returns from the end of January throughout the end of the year, then you still expect to see double-digit rally in the stock market. So that's just 11 months of the year. After this trifecta gets hit, the average return is about 14.5%. So that's a very strong market phenomenon, and that's why it's one that I'm going to be watching closely as we head into 2020. That's really looking at the data, looking at the numbers. We want to see this bullish momentum that we've seen over the last few weeks carry into the new year. And if it hits this trifecta, that's going to be a very good idea that 2020 will be a bullish year and should see double-digit returns. The last time we saw this hit was actually 2019. We had a positive Santa Claus rally, a positive first 5 days, and a positive January. And then since the end of January, the stock market's up about 17%. So it's followed the market pattern perfectly. And if we see it in 2020, I'm going to expect the same outcome. So we're going to follow this trend, and that'll be something that we definitely want to watch heading into 2020. But this is just one broad market phenomenon. I study seasonal trends on a daily basis to find these kind of drift patterns that come up for individual sectors. And then we dive in and we find the ideal stock that you can trade to benefit from the upcoming seasonal trends. This is a broader market phenomenon, and it's one that I use to just kind of in my back of my mind to know that how the stock's going to play out in the upcoming year. But I always stick to my shorter term strategies as a way to generate profits. So if you want to learn how I use seasonal trends amidst these different types of different market environments and everything that's going on, how we can still generate solid returns each and every month, then scroll below and I'll have a link that'll tell you all about my seasonal service where we look at profiting from these unique trends in any type of market. So thanks for tuning into my video today. Again, don't forget to scroll below, click subscribe, and if you like the videos I share, just give it a thumbs up to let me know, and there'll be a lot of content once you scroll below this video that I'll take you to the video on the Santa Claus rally, my recent Bank It or Tank It on Cisco, and I also have a link to my seasonal service so that way you can learn more about that. So until next time, I'm Chad Shoop.